how much money you make isn't the sole determining factor of how wealthy you will become. Because the first thing people think, for the majority of people, is, okay, I have all these payments, I'm making just as much money, and I don't really have that much cushion to really save money or become wealthy, so I just got to make more money. But statistically, what we have seen, when you make more money, you dig yourself into a deeper financial hole. Well, our economic system thrives on this.
Yes.
And this is where the first education we should all have before we leave high school is, how does our economic system works? Because most people never understand this, and then they wonder why they're living like a rat in this rat race all the time, because we never understand how the system works. Our economic system is made up of three different parts. We have the economy, which is the businesses in the economy. We have investors, which are people who own a piece of the economy. And then you have the consumers. This is people, you, me, rich people, poor people, middle class people, businesses. Every single person is a consumer. Now the problem that most people face is most people are only consumers. They only spend money and they don't own a piece of the economic system. So now if you look at the way this works, our economy thrives when people spend money. The more you spend, the more money that's going into the economy. The more you spend at Chipotle, the more money Chipotle makes. If you're not buying the double guac, Chipotle's not making as much money. So it's a system where it encourages people to spend, and corporations will hire the, like you were saying, the best and most smartest marketers in the world to encourage people to open up their wallets and spend money. This is what's happening. But none of us are really given a shield of knowing, when should I open up my wallet and when should I not? See, if you don't understand this system, it can make you, one, broke, but then also very angry, because you're like, I have no money, my banker is taking all my money, these greedy corporations are taking my money, my boss isn't paying me enough, and you just feel like you're stuck. But when you understand, hey look, bankers are in the business of lending money. They want to lend you more money. They want you to go into debt because that's how they get paid. How do you spend less money in a world where the world wants you to spend all of your money? Your job now is to be a smart consumer and a financially educated investor. That way now you can have the nice stuff, but also benefit from the way that the system works. No matter how much money you make, you're always paying yourself first. And by paying yourself first, I don't mean going out and buying a new Gucci wallet or belt. You're paying yourself by buying assets which make you wealthy before you go out and spend your money to make somebody else rich. And this is where knowing, okay, I need to spend a little bit less on things that aren't producing me with value, which we'll talk about in just a second. That way, I can make myself rich before I make everybody else rich. How much money you make isn't the sole determining factor of how wealthy you will become. Because the first thing people think, for the majority of people, is, okay, I have all these payments, I'm making just as much money, and I don't really have that much cushion to really save money or become wealthy, so I just got to make more money. But statistically, what we have seen, when you make more money, you dig yourself into a deeper financial hole. That limits for higher credit cards, you pay more in taxes, and we'll talk about that too. But now you spend more money. And statistically, this is what we have seen happen, which is why for the majority of people, you make more money, you end up even broken. Now it's understanding how you can work hard and work smart, because most of us are taught that hard work is rewarded, and it is. But you have to complement this hard work with smart work. Like, if the hardest people in America were compensated by their level of work, construction workers would be the highest paid people in America.
Yeah.
But they're not. We're compensated completely differently. And this makes a lot of people angry, because you say, man, I put in 20 hours, I put in 12 hours, I've been breaking my back, and this is all I'm making? And this is why we need to be taught how our financial system works, because we're all a piece of this puzzle. But most of us are only consumers. We're never taught how to benefit from the way the economic system works. The first thing I would say is taxes, because this is probably the most interesting about this. In general, the IRS has three different categories of income. You have earned income, or your ordinary income. This is the money you make from your job, your W-2 salary. You have your portfolio income. This is your investment income. So if I sell a stock for a profit, that is my portfolio income. And then you have passive income. This is the money you make from something like a rental property. Something that you're not operating, but it's generating you cash flow. Out of these three different types of income, the income that comes with the highest tax rates and the lowest tax write-offs, the lowest deductions, is your earned income. your ordinary income, the money you make from your job. Now again, this makes a lot of people upset and angry because they're like, wait, what? I'm working so hard to make my money. You're telling me that if I made this money from my investments, which doesn't require as much physical labor, where I can make even more money, I pay less in taxes? Yes. And again, we're never taught this. And that's the first frustrating part, is the reason why people are upset is because they don't know how to take advantage of it. And you can't take advantage of something you don't understand. So the first step is now understanding, look, this is the rules. You can hate me for telling you, but I'm telling you what the rule book says. The IRS rule book says this. It's over 2,000 pages long, and all it really says is, here are the different categories of income, here are the write-offs. Do you know where these write-offs apply? They don't apply for your W-2 income because most people are just taking the standard deduction. They apply for your investment income, your portfolio income, or your passive income. So now the question is, how do you optimize that? How do you take advantage of that? Because the IRS rule book is a rule book. It's a guideline. Like, it tells you what you can do and what you can't do. So now your goal is to understand this and say, based on this rule book, I should be doing this, or I should have been doing this. And this is where tax planning comes into play. If your accountant, if you have one, if you have a business or invest in real estate, I 100% recommend you have one. Always have a good accountant on your side when you have when you need tax advice. Many Americans, your taxes are your biggest expense because it's money that's taken out of your paycheck before you even get to see it. And now if you can understand how you can utilize certain things, and you talked about the real estate professional exemption. If you're investing in real estate, real estate has some of the biggest and best tax write-offs that a tax code has to offer. People like investing in real estate for 3 reasons. 1, you get cash flow. 2nd, you own a hard asset because now you're taking your paper cash to a physical piece of bricks and windows and real estate and land. And 3rd, you get tax breaks. Real estate is one of the best tools out there to use a tax code because with real estate, you get paper write-offs, which means I can show the IRS, hey, I made $10,000 worth of profit, but my taxable income is maybe 0 because I can show them a property is 1 year older. It's called depreciation. So I get to show the IRS, hey, my property is 1 year older, so I don't have any real taxable income, even though you have some money in the bank. Right. And that's going to depend on now how valuable the property is. But now you can make money and pay $0 in taxes. In addition to that, you could potentially, there's a lot of restrictions on this, but if you lose money or lose money on paper, meaning you make a profit, you tell the IRS you lost money, depending on how much money you make and how much money you lose, you could take some of this money, offset some of your job income. There's a lot of rules against this, but you can do that. Then, if you sell your real estate property for a profit, small or big, you can use all that money, go buy another property and pay $0 in tax today. It's called the 1031 exchange.